Good morning, everybody. My name is Sharon Rich. I'm the Senior Trust Advisor with AGID. I'd like to welcome you to our webinar today, Navigating Long-Term Care Medicaid. This is the ICP program for persons in skilled nursing facilities. I have Tracy O'Neill Spencer, AGID's benefits specialist, with us today. And Tracy is going to be taking us through most of the slides on the program. And I will then be talking at the end a little bit also about a couple things. So thank you so much. Again, we are recording the session today. And you should, your phone should be muted now. We have a lot of people on the presentation today, so please put your questions into the chat and we should have plenty of time at the end to answer your questions. We will be sending out an email that will come from Golda at trustagid.org within the next week, and that will have a link to the presentation recording and also a certificate of attendance for you. We do have continuing ed for different people today. And we, for the guardians, professional guardians, please make sure we have your OPPG number so that we can submit that credit for you. So we're going to go ahead and get started. AGID, we are doing monthly webinars. Our primary business is managing special needs trusts. So all of our clients are on some sort of government benefit, such as Medicaid. Typically, almost all of our clients are. So we live and breathe Medicaid. And we manage the funds in a special needs trust because when someone has too much money to qualify for benefits, one of the options is to put the money into a special needs trust, and Medicaid doesn't count the money any longer. So that is what we do here, and we are happy to share our experiences with you. There are many different types of Medicaid, as most of you know. It's not all long-term care Medicaid, which is what most people think about. Although that is what we're talking about today. We have a lot of materials actually on our website, videos about QMB Medicaid for people who cannot afford their medications and copays. Last month, we talked about Medicaid for assisted living residents. That's the home and community-based services program. And we also, serve populations of people. If you're under 65 in Florida, in order to receive Medicaid benefits, you have to meet you have to be disabled, basically. You're on Social Security, disability benefits, SSI or SSDI. Today, our topics include the ICP program, Medicaid Institutional Care Program for nursing home. We're going to talk about applying for ICP and what the benefits are, of course, how to financially qualify, and what are the other qualifications necessary to receive the Medicaid for the nursing home. We're going to talk a little bit about managed care, because Medicaid is under managed care in Florida, what that looks like when you qualify for the ICP program. And then we're going to talk about a couple techniques, two different types of special needs trust that can be used to qualify when you have either too much money. Income, assets, etc. So we are going to talk about QIT trust and pooled trust at the end. Please note that neither Tracy nor I are attorneys. So this information is not, to be taken as legal advice. And we're happy to answer questions. At the end, at Aged, we like to be a resource for our clients, and our email addresses will be shared with you at the end of the program. So I'm going to turn it over to Tracy now to go ahead with the slides.
Good morning, everyone. I am one of the benefit specialists here. We also have Denise Campbell that works with us. And going to talk to you today about the long-term care programs, specifically ICP. But for long-term care programs, there's home community-based services waivers, and there are different waivers that fall under home community-based services waivers. It's not just the long-term care. Then there's ICP and hospice. And ICP, next slide. ICP is intended to help people pay for the cost of nursing facilities. And the services that it covers for a nursing facility would be physician services, activities, dietary. Okay, somebody can you mute your phone or computer? Okay. There you go. Institutional care covers the nursing services, it covers laundry services, medical, over-the-counter meds. Basically, there should be no cost associated with nursing, the nursing home care if they are approved for ICP Medicaid, except for their patient responsibility. And the patient responsibility is something that's figured out based on their income. So in order to qualify for ICP, you must meet the nursing home level of care. And that can be through medical, cognitive, behavioral, or functional issues. It's not just, some people are in a nursing home because they have dementia and they're physically, they are capable of currently capable of walking around, and but they just cannot function mentally, or they are escaping or whatever. But that determination is based on the doctor and cares. And I actually had somebody call me yesterday and said, "Oh, we need to take her to a home." Well, is she medically qualified to be in a nursing home? You can't just drop her off. In order to qualify for ICP, technical requirements are they have to be 65 or older or disabled. You have to be a US citizen or qualified non-citizen. And I know quite a few guardians end up with people that are not citizens, and they try to find papers for them, and that's a tough situation. But you also have to be a Florida resident, and you must be placed in a Medicaid facility able to provide the level of care that is needed for that person. Not all nursing homes accept Medicaid, although most of them do, but not all of them do. You must file for any benefits that you're entitled to, such as a VA pension or any kind of pension. But you have to prove that you filed for that. And because Medicaid is considered the last resort. And then finally, you must meet the program financial limits, and that is income and assets. There are two different requirements for the financials. Next slide. So as I said, Medicaid doesn't pay the entire cost of the nursing home. There's a patient responsibility, and that is their patient's income minus $130. And if they make $5,000 a month, it is $5,000 less $130. If it's $500, it's $500 less $130. There are also things that are included that may reduce the patient responsibility, like UMed or a spousal allowance. And UMed is an uncovered medical expense deduction. And those are things like health plan premium or the dental plan premium, hearing and vision supplies and services. And the facility, if somebody was in a facility for several months before they apply for Medicaid, they can use those bills to actually reduce their patient responsibility for a period of time. Like they calculate it depending on how much it is. They calculate it over 6 months, and then that would lower the patient's responsibility to the facility in order to give them time to pay back that facility bill that was not covered. And the community spouse allowance is kind of a complicated formula, and it includes, they consider the spouse, but Sharon's going to talk about this actually.
Okay, so just wanted to make sure that everybody was aware that if there is a married couple and only one person is going into the facility on Medicaid, the other person still living in the home or in assisted living is considered a community spouse. That person is allowed to have $137,400 in countable assets for Medicaid. So both of them don't have to get down to $2,000. And also there's something called a community spouse needs allowance. So sometimes the person going into the nursing home has most of the income. And if that's the case, and the spouse is still trying to pay the mortgage or the rent or something like that, the government doesn't want to impoverish the community spouse. So they do a calculation based on the budget, what what the community spouse's expenses are, what their income is, and it's calculation. They're allowed to get up to, so you can then divert some of the income from the person in the nursing home over to the community spouse. You can actually pay them monthly, up to $3,260. If you want more information, there's a SSI related Medicaid fact sheet that talks a little bit more about that. And it used to have a really good, the one prior to the current one had a really good explanation on how they calculate it. So they kind of took part of that out of there. Sorry. But usually the attorneys will get involved when, there's this kind of stuff, and I'm sure DCF does a calculation, but somebody needs to check it to make sure it's all right and everything. And just on here, we put the home equity interest limit. So an individual is allowed to own a home as long as the equity interest is not more than $636,000, and there is intent to return. So just wanted to put that in there because we get that question a lot.
And let me just say that the community spouse allowance, the calculation does not consider things like car insurance or car payment. It's just really the necessities that the community spouse is responsible for. Mm-hmm. So in applying for ICP Medicaid, there are several things that are considered. There's a 3008 form, which is a medical form that has to be signed by a doctor or a PA. There's the PASS-R, which is a pre-admission screening, and then CARES, that information is sent over to CARES. CARES does a level of care. there's a form or packet that they send over to DCF, and DCF does the financial determination for the Department of Children, or for ICP Medicaid. And to apply, you can apply online, you can do a paper application, you can go to one of the community partner sites. And let me just say that if you're looking up community partner sites on the DCF website, it has to say public, service the public. We are a community partner, but we serve our client population. So anybody that has a trust here, we can do applications for them if they fall within our guidelines, but we don't do them for the public. And oftentimes we have people showing up for us to do applications, which we can't do. And honestly, the easiest way to apply is to apply online. It might seem a little daunting at first, but you really can't do anything wrong. If you feel like you've messed up, then you can always back out of it, and it's not saved until it's submitted. So things that you need for the application are going to be income documents for all sources of income. And that is Social Security. A lot of people think it's just Social Security. It's not. It's Social Security, pension, a disbursement from an annuity. If you sell things on eBay or Etsy, that is considered income. If it's a one-time thing, then they don't count it. But if it's a consistent thing that shows up on your bank statements, then it is counted as income. You will need 3 months, the 3 most current months of the bank statements. If there's life insurance, they're interested in the cash value, not the face value, the cash value, what you can trade it in or cash it in and get money for it. If there's a burial contract, those are actually, you can cash those in. So it needs to be irrevocable, or you can designate that those resources up to $2,500. And there may be additional documents that they need. If the person is not a citizen, if they have come here and they have a green card, you'll need that information as well. And then once they're approved for ICP, they have to select a long-term care plan. So as Sharon said, Medicaid is handled through managed care. That started maybe about 8 to 10 years ago. And that is the statewide Medicaid managed care program. And the program has 3 parts. There's an MMA, or managed medical assistance plan, that provides medical services, a long-term care program that provides services through the nursing home, or they coordinate services at home or through the assisted living facility. And then there's a dental plan, and they just added that like 3 or 4 years ago. So everybody that has a full community Medicaid will get access their services through one of these or all of these plans, depending on which Medicaid program you have. So all of the plans that they have are required to have minimum coverage services. And there are specialty plans for people that have AIDS, HIV/AIDS, specialty plan for people that have severe mental illness, children with chronic conditions, and child welfare, which is like for children or for kids that are in foster care. Plans do have expanded benefits like acupuncture or chiropractic, or one has art therapy or equine therapy. And those are just benefits that are added to the minimum services to try to get people to choose their plan over another plan. All the plans vary by region. Like down in Miami area. They have, I believe, Molina, which is not available here in Central Florida. And for more information on the plans and what they cover, then you can go to the statewide managed care website, which is, or actually you can go to the ACA website as well, and it'll take you there. Next, okay. So some of the standard benefits or minimum required benefits that they have for the long-term care plan is things like assistive services, homemaking. If somebody's living in the home and they need help with, doing the basic things around the home, it covers therapy, home meals, medical equipment, all of those things. And remember, all of these plans are available for anybody that has long-term care. Next slide. Okay. So the managed medical assistance plan or the MMA plans, these plans are available to anybody that has full community Medicaid. This is how they access their Medicaid. And there are things, the things that they cover really are the medical type services, hospital, labs, podiatry, any of that stuff gets billed through the MMA plan. If somebody is on ICP Medicaid, they would have a comprehensive plan, which includes the long-term care and the MMA plan together. And then moving on to the dental plans. Dental plans are available for adults and for children. This includes people that are on family Medicaid would get an MMA plan and the dental benefits. For children, there are more benefits available. For adults, it's very limited. It's usually limited to things like cleanings and some x-rays. They do now pay for dentures. And there are 3 plans that are available in Florida. I think it's DentaQuest, Liberty, and MCNA. And they all have a handbook. If anybody has a dental plan, then they would check the dental plan handbook to see what services are available. And a lot of them need to be pre-approved. A lot of them are only for medically necessary services. So you would need to check that out. Next slide, please. So once you file your application for ICP, you will get a notice of case action. And the notice of case action advises people of the benefit status. If the application is pending, then it will say, we need the following. We need your bank statements. We need the level of care. We need, et cetera, et cetera. So they'll send you a complete list so that you don't miss anything that is required in order for them to finish processing your application. And this is just a copy of the notice of case action. This is actually just a straightforward notice of case action. And you'll see down at the bottom, the gross income and the amount you get to keep for personal needs, that's $130. And then the rest of that is what they would owe to the facility as their patient responsibility. And I wanted to show you guys an example of the notices of case action that you can possibly get. If you look at this top one, this is with a UMed allowance for the dental plan premium. But if you look at the gross income, less $130, that math doesn't add up to that $2,117.58. There is some other deduction that they're taking. And I believe it's $220 for the dental plan through the facility. A lot of the nursing homes have dental plan arrangements where the dentist comes into the facility and checks people out. They do it every month. but that deduction does not show up anywhere on the notice of case action. So if the math isn't mathing, if it's not adding up to what you think it should, there's some other deduction that they've allowed to reduce that patient responsibility. And as a side note, the dental plan, the dental plans that are at nursing homes are the ones that file the paperwork to get the approval from DCF. If DCF has not approved it yet, then the patient responsibility would be that amount less $130. So until DCF says it's approved, it's not approved. The second one is showing the spousal allowance, and you'll see the gross income, personal needs allowance, and then the amount that they are allowed to give to their community spouse so that that person doesn't have to live in poverty. And then you see it's greatly reduced the amount that they are to pay the nursing home. And what happens if you're over income or over asset for ICP? Sharon's going to tell you more about the trusts and your options.
Thank you, Tracy. So again, this is the chart with the income and the asset limits. For an individual, $2,523 a month in gross income. For a couple, and that would be when both are going into the facility, $5,046. The assets for the individual going into the nursing home, $2,000 in countable assets, or $3,000 as a couple, if both are going into the nursing home. And that would be a married couple living together, is how DCF looks at that. You know, if you've got clients that are over these amounts, you're most likely going to want to consult with an attorney, because there are options for qualifying, you know, for benefits when you're over the limits. I am going to talk about the trust because that's our expertise here. We don't, you know, give planning advice to clients because we're not attorneys, but we can talk about the trust and how those work. There are different types of special needs trust. The ones typically used in the context of nursing home are the qualified income trust, or D4B. Some of you know it as a Miller trust, or a D4C pooled trust. It's called first party because it's the disabled individual's money going into the trust. I do have a presentation that's actually posted to our website on these different types of trusts and what they all entail, if you're interested in looking at that. And actually, I'm doing another webinar on that in a couple months too. The qualified income trust is what we're going to talk about first. This only contains the beneficiary's income, no asset. So a lot of people don't realize that. This is when the beneficiary is over the income limit only. So they're under that $2,000 asset limit. They can use the trust to put their extra income into every month, or all of their income can be transferred in. So there are, you know, rules around what can be paid for out of the trust. And typically you're paying the patient responsibility to the nursing home. The basic concept on a qualified income trust is you're putting the income in to reduce your countable income for Medicaid purposes. And then the only thing you can pay out of it is medical expenses. So you're generally paying the nursing home. Sometimes it works in assisted living, but you know, you got to make sure it's all medical and things like that. Personal needs allowance can be paid out of that too. Also, the unreimbursed medical expenses, the UMed that Tracy talked about, so, or a spousal allowance. So how it works is your Social Security, your pensions continue to go into your checking account, then you're going to transfer an amount over into the QIT trust that you've set up at the bank, and then pay the nursing home generally. Or you can pay the spousal allowance out of that income that you put into the QIT. The rule is that if there's any money left in the QIT account when the person passes away, that money goes to Medicaid. You write a check to Medicaid. They'll actually send you a letter, usually on, because they find out that somebody's died, but you don't have to wait for that. You can just, do it yourself. Individual, corporation, or a nonprofit may be a trustee. So in the qualified income trust, this is a legal document that is done, by an attorney, and an individual. So a family member, helping their loved one can be the trustee of this, and very often they are. No prohibitions about a corporation or a nonprofit being a trustee. At Aged, we don't manage QIT trusts because our pooled trusts can be used for the same type of thing. This is an example of the QIT. Robert is 82. He lives alone in a house, and he had a stroke and he fell. So he went to rehab, and it's been determined Robert can't go back home. He needs skilled nursing. But Robert has a nice income between the Social Security and pension. It's $4,000 a month. So he's over the income limit, but that's not enough to pay the average $9,700 a month bill in a nursing home, right? So he needs to go on Medicaid. He has $10,000 left in savings. Well, oops, that puts him over the $2,000 asset limit. So in my example here, he decides to prepay for a funeral. He makes that contract irrevocable. He pays $9,000 to the funeral home. So he's spent down his money. He only has $1,000 left. His daughter is agent under power of attorney. The attorney drafts the QIT. Daughter's a trustee. She goes down to the bank, opens an account, and every month she said she transfers his income less $130 to the QIT account, and then pays the facility bill out of the QIT account. She's has elected to keep the $130 in the checking account, which is the best thing to do for personal needs. So, if he needs and a haircut that's, not covered in the nursing home, extra clothing, whatever he needs, she can pay for out of that $130 for him. But he still has his home. So how is he going to pay for the house expenses? This is a problem a lot of times. If he sells his house, what will he do with the funds? So he's going to be talking to an attorney about that. One option for somebody in this same situation, another option would be doing a pooled special needs trust. There are about 10 trust companies in Florida that manage a pooled trust. You have to be a nonprofit to be a trustee. So Aged is not the only one. The concept on a pooled trust is that there's a master trust document that's already done, and someone is going to create their own individual account by signing a joiner agreement, joining into that master trust. The funds can be pooled according to the federal laws, can be pooled together for investment purposes, but each person will still have their own individual account. Income, one of the main differences between QIT and pooled trust is that assets can also go into a pooled trust. and income can go in. So you can do income and or assets into the pooled trust to reduce down below the limits. Works for any age for Medicaid in Florida. If someone, however, is on SSI, supplemental security income, there is a penalty applied for using a pooled trust unless it's funded before the age of 65. Must be, doesn't mean you can't do it, but it's a discussion that needs to be had with an attorney. We have information on that also. You must be disabled in order to use a pooled trust, which means you can't go back to work full-time for at least 12 months in substantial gainful activity. That's just one of the rules. In the context of what we're talking about today, it's pretty obvious somebody that needs skilled nursing, can't work, but medical records still have to be provided to DCF because they require a disability determination when you're doing opening and funding a pooled trust. If you're under the age of 65, you're going to be on SSI or SSDI, or have applied for it, that kind of thing. In a pooled trust, the trustee can pay for things that the government benefits do not pay for, as long as it's for the sole benefit of the individual. This is a way to preserve funds and still have some extras for different things like, care management, art supplies, books, a recliner chair, the house expenses, that kind of thing. We'll talk a little bit more about that. At death, there are, of course, federal rules or Social Security, federal and Medicaid rules all around these trusts. You cannot give any money to heirs unless you've paid Medicaid back first. So this is really a way to extend the life of the money for the individual, to give them better care, improve their quality of life while they're living, not necessarily save money for the heirs. This is a nice chart to kind of get it in your mind on how a pooled trust really works. And basically your income and assets go into your bank account or in your bank account. When you open the trust, you're going to put the overage into the trust. If your income is over, you have to transfer income on a monthly basis. And that's true in the QIT, whatever. Every month, the income needs to be transferred into the trust to reduce your accountable income. With the money in the trust, again, we pay bills, lots of different things that we as a trustee pay for: rent, mortgage, facility payments, utility bills. If someone's on SSI, we do have a few restrictions according to the government rules, but generally there's lots of things we can pay for as long as it's for their sole benefit: auto insurance, cell phone bills, that kind of thing. So here's our example with Robert again, who went into rehab, can't go home, needs the skilled nursing, is over the income and the asset limit, but he has the home also. So in this example, Robert decides to only pay $2,000 for a funeral. And so his savings is still $8,000. He's still over the asset limit. So the daughter goes to an attorney who recommends a pooled trust. Daughter signs all the documents to create the pooled trust for Robert, transfers $7,000 into the trust to get his $8,000 now below the $2,000 limit. He's going to put $7,000 in, right? And then every month sets up a transfer from checking into pooled trust for the patient responsibility amount. Aged then, or whoever the trustee is, pays the facility the patient responsibility from the pooled trust. And in the checking, daughter's keeping that $130 for his personal needs, so she can use it as she deems necessary. The trust now can pay for the house expenses because Robert still, quote unquote, has intent to return. Now they put the house up for sale. The proceeds from the home can go right into the pool trust. No problem there. Now the funds are available in the trust for Robert's comfort and care. At death, you follow the termination provisions that are in the joiner agreement. So that was the lowdown on the QIT versus the pooled. Again, special needs trust is our one option for qualifying for Medicaid. Basically, funds don't count, as a beneficiary's resource or income, and there's no waiting period. So people say, oh, well, when you do, you're giving away money. You're not giving away money when you put it in the trust. So there's no 5-year look back period. You don't have to spend down your money. So many nursing homes say, okay, you've got the extra money, just spend it down and then go on Medicaid. I'm here to make sure you understand that there are other options. And the whole point really in doing that is preserving the money, improving the quality of life for the individual. That concludes the meat of our presentation today. We talked about the institutional care ICP program, the managed care plans that you have to select once you go on, get qualified, the qualified income trust, and the pooled trust. And again, make sure that you're consulting with an attorney. These are some helpful websites for you. Again, you're going to be getting this presentation emailed, or a link to it emailed to you within the next week. But this is ACA. Tracy mentioned ACA earlier. They have a lot of information about the managed care and the long-term care plans. And there's your direct statewide Medicaid managed care, Department of Elder Affairs, Florida DCF, that's how you apply for benefits. Your financial eligibility chart that we took segments of today can be found at this link here. This chart changes about it's published 4 times a year, and the numbers always change at the beginning of the year, and then sometimes during the year they will change a little bit sometimes. The next one's due out in July. And the Medicaid fact sheet, this is a nice publication that has quite a bit of information in it, if you're interested in that. Our next webinar is going to be a detailed explanation of how to complete a Medicaid application. And guess who's going to be doing that for us? Ms. Tracy. Next month. And the following month, I'm going to be talking about the differences in special needs trust, really going in more into depth about the third party, the D4As, and the different types of trust, when they might be used. Believe we're going to have an able account a guest on, John Finch, who runs the program for Florida. We hope to have that in September, and most likely another one in October. So look for your email from Golda and with your certificates. And if we don't have your OPPG number already, we are trying to keep a list. Please email it to Golda. And this is our information here. And Golda's going to go ahead and put that in the email also. She'll have our emails for you. We like to be a resource to our clients and our professionals. So please feel free to reach out to us at any time.
And Sharon, we've got quite a few questions in the chat.
Yeah, so do you
So-
want to go through those?
Yeah, let me start back at the beginning. Nathan Ward, there's a question here. If there's no money for ALF, I don't exactly know what that is. That means. So you might want to send me an email directly at benefits@trustagent.org and I can answer you directly. Question is, can someone have Medicaid, ICP, and not have an MMA plan? An MMA plan is part of the comprehensive long-term care plan. So they're going to have that coverage. Whether or not they choose to use that is up to them, but that's how they're going to access their Medicaid benefits. The medical Medicaid benefits is through that portion of the comprehensive plan they have. So they will have that coverage if they need it. I have clients in nursing homes that have dental services. However, they're still being charged by a certain company a month. Is that the copay for the dental plan? No, the dental plan that I mentioned, it would be one of the three that covers Florida, that comes with ICP Medicaid, would be DentaQuest, Liberty, or that MCNA. The dental plans through the facility cover more. You've got a dentist coming into the facility. So that the person doesn't ever have to leave the facility, and they will cover a lot more things than the dental plan that's available through the dental plan that comes with their Medicaid coverage. So, and they're paying that money, but their patient responsibility is being reduced by that much, so that they can pay the dental plan separately and pay the facility separately. So it's a more comprehensive plan through the nursing home that they're getting.
And Tracy, they should make sure that their patient responsibility is being
It's been reduced, right?
And if
Right.
not, they need to let DCF know.
Right. It's generally up to the dental plan to file that paperwork. That's not usually something that the patient has to do, because the dental plans that work with the facilities want to have people join their program. And there's usually a contact at the facility that you can talk to about making sure that that's done. Can you qualify for adult companion care or attendant care in the nursing home? I believe what you're asking is, can you get separate coverage for companion care or attendant care in the nursing home? No, because that's a service that the nursing home is supposed to be taking care of. If somebody needs an additional companion, that would be out of pocket. Or if they have a trust, it's something like our trust can pay for something like that. Attendant care at a nursing home. Is it one or the other on QIT versus pooled, or could you have both? And Sharon, do you want to answer that?
Yes, you can have both. And sometimes people come to us when they've already opened a QIT because all they had was over income, and then they sell property or something like that, come into money, and we open up the pooled. At that point, they could just get rid of the QIT if they wanted to, and just use the pooled for both. So there's no prohibition about having both. But remember, the QIT is for income only, and the pooled trust can be used for both income and assets.
Okay. Can the pool trust pay for companions biweekly and the QIT pay for the nursing home?
I'm sorry, I lost the chat. Let me look again. Can the pooled trust pay for the companions bi-weekly? And the QIT pay for nursing home? Yes. Yeah, as long as there's money in the pooled trust. Yes.
Can the pooled trust pay differential between the Medicaid bed and the private room at a nursing home?
Yes, absolutely. And we do that sometimes.
Okay, someone says the emails to Golda are being kicked back. So Golda, if you can check on that.
I've been receiving the emails on my end.
Okay, okay. What do you do if a client or family member withdrew funds from their bank account years prior to your involvement, and now DCF is looking at those withdrawals as unauthorized transfers? That's a problem.
So, you know, they will assess a penalty, period. What you need to understand is that you still need to apply for Medicaid. And because that's when the clock starts ticking. So if someone gave away $10,000 2 years ago, there's an asset divisor. So it's basically about $9,700 right now. So let's say the gift was $9,700. Medicaid will approve you, but they'll say, we're not going to pay for 1 month. So we're delaying your, the payment to you for a month. Now, if you made a $30,000 gift and there's a 3-month penalty, then the Medicaid's going to kick in after 3 months, but you still have to apply and start the clock ticking. So that's generally how it works. And if there's a way where if there's like, it was a large thing or something, and you need to talk with an attorney, because there may be ways to rectify that gift.
Okay. I thought you could choose to decline MMA if you have a credible supplement. You can still have a Medicare supplement in addition to having Medicare, a supplement, and your Medicaid. But that's how you don't have to decline it, because that's part of the comprehensive plan. So the Medicaid is going to be there in case they need it, but it's not a separate plan. Years ago, they used to have an LTC plan separate and the MMA plan separate, and they could be 2 different plans. Now it's all in one. So, but you can still have a supplement and have your long-term comprehensive long-term care plan. When someone passes, does AGID provide a statement showing how much money remains in the trust, how much AGID is keeping, and how much is going to Medicaid?
Yes, we do. We do a scheduled distribution and provide it to our, our beneficiary advocates, and if anybody was named as an heir in the trust.
Okay. Oh, hang on a second. My thing just went away. What is considered personal needs in QIT and trust account?
So they might be asking what the $130 can be used for.
Yeah.
And pretty much anything. I mean, you don't want to be giving money away, but it's whatever the individual needs. Is that any?
Yeah, I think that's what she means. That it says clothing, personal hygiene. That they can buy pizza with it. They can go on an outing. That it's their money to use as they see fit. There's no restriction on what they can use that on. Oh, let's see. What is the email address again for the CEUs? And that is golda@trustagid.org. For one of my ladies has straight Medicare and a drug plan. Okay, I don't understand the question. She has straight Medicare and a drug plan, and she has ICP. She still has that medical coverage through that MMA plan. Medicare is the primary and Medicaid would be the secondary. So she still has coverage. Nathan, if you want to give me a call or send me an email at benefits@trustagent.org if you have more specific questions that I can answer. So, and I think we've answered all the questions in the chat. Oh, new message. Okay.
Oh.
Does anyone else have any other questions? No?
Go raise your hand or. Okay,
Oh, hang on a second.
good. Well, thank you, Cheryl and Valerie. I'm glad it was beneficial to you.
Thank you very much, ladies.
All right. Well, we're going to conclude today's webinar. Thank you for joining us again, and we look forward to talking with you again soon. Bye-bye.